To delve into what's taking place on the markets, Chris Gilmour from Absa Investments joining me at the desk. Chris, we have to start with the rand. I mean, look at that rand. It looks like it's sliding towards 8.30, which is seen as a technical level.
Absolutely. And that's one of the reasons why you're seeing Sasol so strong today, 4.7% up. Because Sasol, if you look at it, is actually more sensitive to the rand-dollar exchange rate than it is to the oil price. And as you mentioned, the oil price not so strong, but the rand really tanking today. Mainly, as you say, because of the fact that the euro is so weak, and in other words, the dollar is strong. So while that persists, unfortunately, or fortunately, depending on your viewpoint, we're going to have a weak rand.
In the meantime, of course, storm clouds are brewing over Europe. Would you say it's that dramatic to say something like that?
Yes, look, I think what is happening now, we are getting close to a point where we're going to get some sort of resolution. On the one hand, you have the Eurocrats in Brussels grimly holding on. The last thing in the world they want is for Greece, or any other country for that matter, to leave the Eurozone, or whatever. If you go into Greece and you canvass most people, I think you'd still find that most people still want to stay in the euro, if for no other reason than it imparts a sense of discipline. Unfortunately, what's happened over the past couple of years is the extent of this austerity package has meant that we've seen unemployment rocketing. You're seeing political instability. The fact that you can't actually get a government together, even a government of headed by a technocrat, speaks volumes. So unfortunately, I think what may well happen in the not too distant future is that Greece will have to exit the euro. I don't think they're going to be left with any choice.
Is it, from your sense, I mean, the people you speak to in the market, is there a sense now that everyone's pricing this in, that this is the inevitable?
Not yet, but I think, ironically, it would probably be quite good for markets. I'm not necessarily going to be good for the Greeks or the Greek economy or the greater Eurozone, but I think what it would do, and from a market perspective at least, would be to remove a degree of uncertainty. Because if you take one country, a country which, it doesn't matter what they do, they have no chance of paying off their debts in any sort of reasonable time frame, even if you take a 100% haircut. I mean, it's just an absolute disaster of monumental proportions. But at least it would be saying, you know what, there's some sort of decisive action being taken place. The Germans, there's no love lost there. They've had to go, let's not forget, back in the 90s, they had to go through their own form of austerity. So they know precisely what it's like. Angela Merkel is from East Germany, no stranger to austerity. And I think what they're saying is, guys, if you want it, if you want to stay here, go through it, take the pain, because the end result will probably be worth it. But I think the Greeks are losing the stomach for it, yeah, at a parliamentary level.
There seems to be a rise in hostility, anger amongst the Greeks that has been there for some time now. Just very quickly, in America right now, we've had a lot of patchy data that continues to filter through. Retail sales up 0.1% for the month of April. Consumer inflation flat. Gauge of manufacturing data coming through better than expected. Your thoughts on the American economy right now, how it's holding up, and whether it's holding up enough to spur global growth?
Look, I think it is holding up remarkably well. And I think it was Mark Faber the other day who said, compared to to Europe, the Americans look like a bunch of geniuses. And it's true. I mean, it is patchy. It's not fantastic, but the overall sense is that it is kind of grudgingly gaining some sort of traction. And yes, that does help. But we have to see more and more of this, and we have to see it in the context of not necessarily just being in an election year. This has got to carry on well into 2013 and 2014, and if that's not going to be the case, then we've got a few problems.
And Timothy Geithner warning the markets today, just looking at one of the news headlines that came out saying that they have to get their books in order. The fiscal deficit that they sit with is huge. So we keep on focusing on Europe, because 2 years ago we knew that the debt situation in Europe was unsustainable. We saw huge debt to GDP ratios. Then that filtered through. 2 years later we got the European crisis. What if Europe is a big dress rehearsal for America and we're not out of the woods for many years to come?
Oh yeah, look, America's still the biggest debtor nation in the world by a long way. So there are major and profound fundamental problems in America. What we've seen over the past few years, and what has kept markets alive, is that companies in the US have become very much leaner and cleaner, but it's not reflecting what's actually going on in the underlying economy of the US. Unless and until we start seeing fundamental improvement at a really profound level and on a sustainable basis, then yeah, let's say there's a few problems in the States.
It's interesting you talk about companies in America, because we know that Facebook has its roadshow right now for the IPO. They've raised the price target for those shares to $34 to $38. And Naspers is a stock that rallied today. It was up almost 2% on the day. Do you think any connection between the Facebook IPO and the fact that Naspers has a stake in Facebook?
It's a very small and a very indirect statement, yeah. but I think you're right. I think it's just a reflection of the fact that that at some point in time it's going to filter through. But yeah, I get a little bit concerned about a company that has, 500 employees. It has no real intrinsic value as such, and yet markets are going to get carried away with it.
Are you talking about Facebook now?
Facebook, yeah.
Not
I'm not talking about Naspers. No, we have a holding in that.
Well, the CEO of Naspers, of Facebook, we're getting confused. The CEO of Facebook, of course, Zuckerberg, coming out saying 900 million users can't be wrong. It's not a fad. So, I mean,
Look, it's very popular, make no mistake. I've got an account, and I'm sure you've got one, and I even use it from time to time. But yeah, no, it's incredibly popular. But all of these things do have a limited lifespan, and at
people
some
get
point
bored.
in time,
That's human
exactly,
nature.
Exactly.
Yeah. So Naspers, you have a holding in right now.
Yes, absolutely.
Let's delve into some of the markets news. We had Coronation Fund Managers coming out with their results today. Increase in first half revenue up by 11%, and diluted headline earnings per share coming in at 86.7 cents. Your views on those numbers? Of course, a competitor, so I don't expect
absolutely.
a long.
But if you look at what's happened in Coronation over the past 2 or 3 years, I mean, an incredibly good performance given the degree of volatility we've had in these markets. They're a very, very solid outfit, and to come through with that kind of result in this type of market, I think is 10 out of 10 for them. That was great.
In construction space, Stefanuti also coming out with earnings today. A drop-off in earnings in the construction space overall. We've seen low profit margins, delayed contracts, government contracts delayed. What does this mean for the outlook for construction companies when you see commentary like this?
Yeah, look, I know there are a lot of quite a few fund managers out there who take a contrarian view. They say, well, things have got so bad, now's the time to buy. And ordinarily, I would tend to agree with them. If the time scale, if the time horizon that we were looking at, during which time they would get the conditions would get better, would be reasonable. Unfortunately, we take the view that this is going to be a 2, 3, maybe a 5-year view. Margins, as you say, the competition pressures are just so intense. I think it's going to be a really lousy space to be in for the foreseeable future.
So not touching construction?
Nope, we don't have any exposure to it whatsoever.
Okay, we'll leave it at that for today. Thank you so much for coming through. Chris Gilmour from Absa Investments.